Hello, everybody. Thank you so much for tuning in today. My name is Zanzi, and I am the host of the Showcase AMA series here on the Polygon Discord. Today, we got a really special guest coming in from Polysynth. We have Swati, who is the head of growth and marketing. How are you doing today?
Hey, hi, Zonzi. Thank you so much for having me over on your Discord server. I'm really looking forward to this AMA. And for the audience that has joined and who's going to be viewing this stream, I promise this is going to be worth your time. And thank you for chiming in. I'm doing quite good today. It's late night here in India, but like super stoked to be here and super stoked to do this AMA with the Polygon fam.
Awesome. Yeah, I'm super stoked to have you here as well. Um, so, I always like to kick these off doing some introductions. So, how would you like to tell us a bit about what your backstory is, what you were doing before you got involved in crypto, and like what got you into the space?
Yeah, absolutely. So, my name is Swati, right? And I had growth and marketing at Polysynth. So before Polysynth, I had my own company. I was the CEO founder of a stealth mode DAO. This was back in October, November last year when things, things were really hot and uh, like all own folks were sort of budding up. And I happened to found one of those. What we wanted to do was basically make a decentralized version of VC investing. So we wanted to productize community investing by raising money from the community and letting the community decide through governance and letting the community participate in upcoming projects with check sizes ranging from 20K to 100K. We raised about like 1.3, 1.5 million. Some of the treasury was an eighth. So that's what I was doing prior to joining Polysynth, right? We had a very strong community. It was like 12,000 plus members. I think that was pretty good for 2, 3 months of effort. But before joining, or like before starting my Web3 journey, I worked in a travel tech company. This got acquired. I was as well the head of growth over there, and this got acquired by a publicly listed firm. Before that, I worked briefly with the CEO of an edtech startup. And prior to that, I come from a super corporate background. So I used to work as a consultant with McKinsey and Company. I have an educational background in engineering and general management, right, from two topmost ranked universities in India. My crypto journey started back in 2017. I call myself survivor slash soldier, right? So I, of course, like got into the fray in October, November 2017 when like Ethereum was really picking up. Bitcoin was already like kind of there, but like Ethereum was really up and coming. Of course, like saw the crash in 2018, had like a bunch of coins. I had Tron back then. I had a Litecoin and like Sia coin and all these coins which you've probably not heard of. And yeah, of course, like half those exchanges got sacked. So sort of like took a break from crypto and also like to complete my studies. But then when things started to heat up again in 2021, I returned this time to be like fully committed to Web3. And that was the start of my journey. So
Sweet. Well, it's great to meet you, and it sounds like you have a lot of exciting experience with various ventures. So let's jump into Polysynth. When did you get involved with Polysynth? When did Polysynth start?
yeah, so I started working at Polysynth late in April, like almost May. But so actually, like I have been a part of the journey with the team back when they started in July 2021. That's when the funding was being raised, and 1.5 million was raised from Jump, Brevin Howard, Ledger Prime, Hashed, and Smith, and so on, right? And Polygon founders as well, Sandeep and Jayanti themselves. But I wanted to do something of my own, which wasn't really, like I told you, right? I described what I wrote. Um, so I've been keeping a tab on what Polysynth was doing, but I officially started working at Polysynth back in late April, right? So to answer your question, Polysynth started last year. And in January, Polysynth launched the first product, which was a perpetual trading platform. So basically, like it was a trading terminal for perpetual futures. The version one accumulated about like more than 200 million plus trading volume, and another round was raised. But Pub V1 sort of like had some technical like anomalies, like it had protocol level problems which are unsolved yet. So, but we have cracked that, and we're working on V2, so that'll be launched like early next year. But that was the story of Polysynth, and it started, with with becoming a one-stop solution for derivatives trading on Polygon. That's how it started last year.
Fantastic. Yeah, that's pretty neat. I think it's really cool what Polysynth is doing. So let's talk a bit more about like what services they're providing today. Like what can users do with Polysynth?
Oh yeah, for sure. So I'll also share my screen in a bit because we have a nice cozy group of audience, and I really want to give everyone like a walkthrough of how you use the terminal because I think that is super important. Um, it is key to note here that it is not something as simple as staking, right? Like you just put your money and watch your coins grow and have like a fixed sort of return on them. So Polyson basically offers a simple way for users to earn yields via depositing assets into structured products. So the structured product that we're currently live with is DOVs, which are basically DeFi option wallets. Uh, so the way we've packaged DeFi option wallets is that they remove the entire complexity and trading efforts, right? So basically, you're selling options behind the hood, but all you have to do is literally like deposit BTC, either USDC. Those are the three assets that we are currently live with, and the APY is paid in the deposited assets. And for me, that is the best part about this protocol. Like, it's not like I get something in the native token. If I deposit ETH, I get back ETH. So, say you deposit like $10,000 worth of BTC, the current historical projected APY on it is somewhere around like 25, 26%. So, you will get like $2,600 worth of BTC back at the end of 1 year, right? So, let me just quickly actually fire up this tree mode. Zanzi, can you give me a go ahead when my screen is good to go?
Yeah, right now we're just looking at your Discord, to be honest.
Okay, yes. Okay,
There we go. Now it's
so
perfect.
there you go. So if you sort of like fire up Polysynth and connect your wallet, so mine's already connected. It shows you can choose from the markets. So I'll just pick Ethereum market. There's currently like $1.2 million already deposited. I haven't deposited on the Ethereum market, which is why this shows 0, 0. But this is like your own dashboard view. This would tell you how much you've put and the average APY over there. So I'm just gonna put okay, let's just select this. Okay. So this is WBTC covered call. Okay. Now, what are covered calls and how to read this diagram, right? So this is super critical, and I would urge everybody to pay attention to this. So what this means is that I'm saying as an option seller that I think by the end of Friday, so Friday to Friday is the cycle, is the weekly expiry, right? I'm saying that I think the market price will not rise more than $27,000, right? It's currently at 23,000, so it's no way gonna rise above 27,000. How I do the strike selection is another story altogether. The protocol team does that. The DeFi lead actually does that. It's based off of volatility of ETH and our backtested results. Backtested results are something that you can check on the blog. We've given the entire simulation of how many times the strike selection mechanism has failed and succeeded. So till now, this vault has a success rate of 100%. Our strike rate overall out of all the vaults is over 90%. What this means is that my prediction has always been true. So as a seller, as an option seller, I've always collected premium on my walls. So the premium that I've earned has an APY, has a projected APY currently of around 19%. So what this means is historically, if you see, so cumulatively, this is per week, right? So 15 to 22, that's 1 week. This week I won 0.2%. This is weekly 0.2%. Another 0.66% this week. I mean, cumulatively. So if you kept for 2 weeks, you would get 0.66%. For 3 weeks, you would get 0.89%. For a month, you would get 1.02%. Okay. So this is how it roughly runs, right? Um, I'm gonna just so yeah, one more important thing that you just have to put down the amount of BTC. So if you also think that okay, the spot price of Bitcoin is not gonna go above the strike price, so you walk away with any price appreciation that happens between the current price up till the strike price plus the premium, right? So it's a neat way of earning money. So if you're already holding BTC, this is specially designed for people who are already holding BTC. If you already have it, why not also have the chance to earn as much as 80%, 18% APY on this, right? Uh, the beauty of Polysynth as compared to other competitors is that we choose our strike prices very, very conservatively, right? This could have also been like 2,500, but then I'd be closer to the danger zone. If I see a 24-hour price movement, it's more likely that 23.5 thousand 23.5 thousand can hit 25,000. But I have been conservative in my approach to select the strike price. And as a result of that, you can see that this is, it's far out of the money. So I've selected my strike, which is far out of the money. And tomorrow we're going to all go home happy, hunky dory, keeping in our pockets the premiums that we've earned. Let's check out another vault actually. This one has a really good APY. It's almost like it's over 37%. This vault also has 100% success rate. So this has like almost 2% in the last 2 months, almost like 2%. So if you compound it, that's more than 25%. It's almost close to 30%. So as you can see, it's 37% over the entire year. And the strike over here that is selected is 1550. Now, if you notice carefully, this is a covered put. So there are two kind of options. One is a put option. So these are put options. These are call options. So when I sell a call option, what I'm trying to say is the seller basically has the obligation to sell at the strike price, and the buyer has the right to purchase at the strike price. So let's say let's go back to W8. Let's say the spot price goes to $29,000. The buyer will have the right to purchase from me at $27,000, right? um that's what a covered call option means, right? And basically, and to purchase that right, the buyer, which is essentially like a market maker, is giving me money, and that money is translating into the APY. So one thing that's beautiful about option selling is that these APYs are really not coming from token emissions. These are coming from real yields that are denominated in terms of the native asset. Now, just coming back to covered put, what covered put means is the seller has the right to buy. So let's say the strike price goes below 1550 of Ethereum. Let's say it goes to $1,300. I will have to buy the asset at 1550 per ETH. So I am giving the buyer of the put contract the right to sell me Ethereum at 1550 if the market goes below. And because I'm giving him or her this luxury, he pays me a premium for that. And the premium paid is this APY. Zonzi, I know this is like knowledge overload, and I really want you to stop me if there's anything that,
Yeah. So just to like clarify, essentially what's going on
yes,
here is depositors into these options vaults are coming together to share like call and put options.
the premium, yeah. Like if you deposit, you, so let's say we earn like $4,000 worth of premium for this week. Everyone gets pro rata to their deposit amount. The current deposit is $154,000. So everyone who's deposited gets pro rata the returns generated every week. So when you deposit before Friday, your funds get logged in the upcoming cycle. Every cycle starts Friday, 1:30 p.m. UTC, and then they're logged up for 1 week. So your capital needs to be deployed for 1 week for it to earn that premium, because essentially that capital is in an escrow with the market maker, right? This market maker is paying you the premium. So let's say the premium for the week is, or let's say the premium for the year is 30%. Okay. Now, if I give the market maker $100 worth of Ethereum, he's going to pay me 30 bucks worth of Ethereum. And this 30 bucks worth of Ethereum will get distributed pro rata amongst people who deposited cumulatively the 100 bucks worth of Ethereum. Does that answer your question?
Yeah, and just to like for some clarification, like so, where does the buys of these like puts and calls come from? Like who's on the other end buying these?
Yeah. So these are market makers. I cannot reveal their names because this is going to go on public. So how this happens behind the scene is that it's an RFQ system, request for quote. Every Friday, we do a little like fun auction with the market maker. So the best bidder gets to buy what we're selling. So let's say you're XYZ market maker, right? So Zonzi is a market maker and Swati is as well a market maker. Now Polysynth comes and it open auctions. It says that, okay, I have one Ethereum deposited. How much do you want to pay me to buy a call option on this? And you can quote and I can quote as well. So I can say, okay, well, I'm gonna give you like point 0.5 or like point, yeah, point 0.5 Ethereum for this week, right? And I can say, oh, I'm gonna give you 0.52 Ethereum. So I'm gonna win the bid. So that's how it is. It's a request for quote competitive bidding system with the market makers. They purchase these options.
Okay, cool. That makes a lot of sense. Um, so we got a question coming in from Aditya. He's
Uh-huh.
wondering what happens if the strike price is hit.
Zanzi, I'm losing you. So what happens if?
Yeah, so Aditya is wondering what happens if the strike price
Mhm.
is hit.
Oh, if I exactly get to 1550?
Yeah.
Yeah, so if I exactly get to, so yeah, that's a great question. So if I exactly get to 1550, um, nothing really happens. Like I get to keep all my asset and I keep the premium. I get to keep all of my asset because the market maker is not going to buy any of it because it's at the same price. And I get to keep all of the premium. But for anything above 1550, let's say it goes to 1600, I'll have to sell $50 worth of asset. But why this is a flat line is because the remaining amount of asset, $1550 worth of asset that I have, the value of it has gone up, right? Because the current market price has gone up. It's gone to 1600. Is this clear?
Yeah, that makes sense. So, like, what happened? Like, say it went below the strike price, and like, what would happen then? Say it went to dropped all the way down to like 1200 or something, hypothetically.
Yeah, so if it dropped to okay, let's let's get to call options, right? So let's say it came here, right? It came to this point. It was it's currently 23, and let's say it came down to 20,000, right? That's your question? Like, or
Well,
18,000.
no, I meant on the put contract.
Oh, on the, okay. So on the cash covered put. So, oh, okay, let me explain myself again. When I purchased the, or like when I sold the put contract, the price was higher than 1550. The price was higher than 1550. So I'm essentially saying that if it goes below, if it's $1,300, I will pay you the difference. I will pay you uh, 250. I'll pay you 250 bucks. If it goes above, then nothing happens. Because remember what we said about the put contract? It gives the buyer the right to buy from you. And if the current market price is uh, or sorry, it gives the buyer the right to sell to you. So if the current market price is, let's say, 1600, why would the buyer want to sell it to you for 1600, right? So the entire contract would expire worthless. You carry your premium and you walk home. So as long as the price remains more than 1550, I'm happy. I'm not losing anything. I'm keeping the premium as well as all the cash. But if it goes below 1550, like I said, if it goes to 1400, I'll have to pay $150.
Okay,
That's what's gonna happen.
cool. So there's like a
Yeah.
slight risk of loss. Um,
Yes, but again, like I said, we take a very conservative approach.
yeah.
So yeah, it's 1860. I took this because uh through my back tested results, I have a formula that tells me that it's very, very unlikely that within a week the price is gonna touch 1550. Like you can see, right? Like there's no chance that it will be 1550 tomorrow, unless I don't know, like some war happens, but
Yeah,
it's
I'd
extremely
cry if
unlikely,
that would
right?
happen.
Yes. So yeah.
So, yeah, we definitely got a bit more questions coming in. Like Foxy's wondering, is there impermanent loss being happening in regards to the market makers and their biddings? Like, is
Oh, no, no, there is no, there is no concept of impermanent loss here. So actually, you know what? So we've made this series. It's called Earn Like a Pro. Okay. It currently has like 3 episodes, and this gives you like a step-by-step playlist. And Earn Like a Pro. This gives you like a step-by-step calculation of what's gonna happen in which scenario. It's actually pretty simple. So just in summary, if you sell a call option, it means that you are saying that the market is not going to go above a certain price, right? And you are showing certain confidence that it's not going to go above a certain price. If you sell a put option, what you're saying, in other words, is that I think that it's not going to go below the certain price, which is called the strike price, by the end of expiry, which is 1 week in our case, right? But what the plus point with options is that in the case of covered call options, because it's covered, even if it goes above the strike price, you still retain the asset that grows in value. So you're never going to make a loss as long as the market goes up. If it goes down, it's okay. I'll tell you why. Because you were holding this asset anyway. So if you had just kept holding the asset and the market tanked, you would lose a lot of money. But in this case, yes, of course, you lose a lot of money in terms of notional value, which is the same as you would have lost if the market crashed. But you get to keep the premium. You get to keep a 25% premium. So that offsets your losses. In the second case, in case of a put option, um, what you're saying is that I think the market is not going to go below the certain strike. So let's say if it stays above that certain strike, everything is hunky dory. Even if it goes below the certain strike, you just get to accumulate that asset cheaply, right? So even if you had to, let's say, purchase from the buyer because he exercised the contract, you have an opportunity to purchase when the market tanked, and that's a good thing because this option is giving you the opportunity to buy an asset at at a time when the market is tanking. You see what I mean?
Yeah,
That it's a good
definitely.
thing. Yes.
So
So if you anyways wanted to buy ETH, it's good to buy it via a put option.
sure. So I just dropped your the link to your YouTube channel in the chat if anyone wants to like go and check out that
Yes, of
series.
course. Yes,
Um,
that'll be nice. Unlike a pro, I'm just gonna.
cool. And I really appreciate you giving us like such a in-depth explanation as to how everything works.
Of course, because I think one of the biggest challenges that we face every day is education. It's just speaking personally, like all of us teammates, because we know that this makes money. We have like out of the 2.2 million, all of us I think combined have some 100K deployed, right? Just like three, four of us, the leadership team. So that just shows how strongly we believe that this works. It's all, it's all scientific. If you want, it's all mathematical. If you want to understand it, and actually, you can go onto the Polysynth blog and look at all the back tested results. I think that's going to give greater confidence in how this works and how we're so confident of these strike prices.
Yeah, that makes a lot of sense. That's great to hear that you guys are also like personally utilizing these strategies. Yeah,
Yeah.
that is a good testament to you guys believing in the product that you've made. So, um, cool. Yeah, this is awesome. So I guess like I don't know if you want to go like more in. You already went pretty in depth on that. I guess some other questions. Um,
Yeah, I don't want to bore you to that. I think it will be
no,
enough.
it's
So,
not boring.
it's like three videos, 2 minutes each. I think they do a better explanation than me, even though I'm the voiceover and I wrote the script. But I think that'll give like greater clarity into how the platform
Oh,
works.
that's cool. Yeah, everyone's definitely got to do their own due diligence before they use things, and I totally
Yeah.
like totally makes sense that this is like a more complicated than a lot of other strategies people might use. So yeah, definitely pays to take the time to learn things on your own. So I guess like other questions I have would be related, just like I don't know, something we always ask projects is when token. Like, do you guys have a token or any plans for one?
So we do have a token. It's called the poll token. We currently haven't had the TGE yet. So the TGE was the generation event was planned for May, but the market really went sour, and we thought like it's not a good time to have our TGE. We're planning our TGE now in October. After of course like evaluating the market sentiments at that time. So I would request everyone to stay tuned during our service so as to know when that happens. We've already had like 2 rounds of funding, so there's of course like a price to the token already. Um, it was um uh it was 0. If I remember correctly, it was 0.025. Yeah, it was 2.5 cents. It was 2.5 cents in the first round. Um, and at 25 million FTV when we raised the 1.5 million. And then in the next round, it was 10 cents. So 100 million in FTV. We have a billion tokens, out of which, by the way, 40% are for the community. So it's a good chance to pick up tokens that have already been invested in. There's a lot of confidence in them already by a lot of investors. Let me just see. Do we have? I'm just gonna share my screen once more. So if you just check this out, where's that about us? Yeah, so these are all our investors, right, across 2 rounds. And we have like a bunch of community VCs, angel investors, and so on. And these guys have invested across 2 rounds. The public sale is when the TG will be done, and this will be done at zero point 0.4, so 40 cents. The I mean, this hasn't been finalized yet, but tentatively so. And pool tokens have like a utility where you can get a discount on the fee that the platform charges for deposits, which is like 10% of the premium. Only the premium. We don't charge anything for the deposit. Um, and governance will be rolled out soon after that. So that's about the token launch for the public.
Sweet, that's some serious alpha right there. So really appreciate you
Yes.
sharing that with all of us. Um, Ooh, great question coming in from Frankie. Well, he's got two actually, so he's wondering like,
Mhm.
are there any reward tokens? And I guess I'll just like add to that. So like in regards to all the vaults, like are the APY is that paid out in the same token you deposit with?
Yes, that is the most beautiful part about the entire thing. That if you deposit BTC weekly, you're gonna get your premiums in BTC,
Okay,
not
awesome.
token.
And
And
then
you additionally, of course, like accrue pull tokens because we have pull rewards. But your APY is just serious BTC or like the asset that you deposited.
okay, and then his next question is regarding audits. Have you like had any audits done, or are you in the process of getting any done?
Yeah, we're in the process currently, Zanzi. So the PERP contracts were audited by Pexfield and Nomination. These current DOV contracts, they're like a fork of ribbon, but now that we're developing new things on top of them, we've applied for audits with the same auditors, tier one auditors. So that should be out soon as well. Also, the KYC, although all of us are doxed, there's going to be a KYC as well.
Fantastic. All right. So it sounds like lots of safety in place. We got another question regarding long-term plans. Like, what is the future of Polysynth focused on yields or leverage trading, or is it like a mix of both? Like, how do you envision the future of Polysynth?
Poison sort of like started with a vision to, like I told you, right? To build like a derivative native shop on Polygon, right? We wanted to build like a one-stop shop for everything related to derivatives, and the short-term goals right now are to build as many partnerships as possible because, and I'm going to share my screen once more. So I cannot take names, but we're doing like aggressively, especially because it's the bear market and we really want to utilize this time building partnerships. What is beautiful about DOVs is that you can it's inbuilt composability, right? So for example, you take your Matic, you stake it on Lido, you get your stake Matic. Now we can have an option vault on stake Matic tokens. So you earn not only on the staking, but also on the option on the stake Matic. So that's like composability to another level, which is why it's extremely critical for us to build partnerships, and that's what we're focusing on in the short term. So that's our goal, to build as many partnerships as possible. And we're doing this via three mechanisms, actually two mechanisms, and one which I'll talk about a little later. The two mechanisms are opening a vault for the native token, right? So like I gave you the example. Let's say let's say the protocol is Aave, and I can have a vault for Aave token, right? That's one way. So that users have an additional venue to earn yield on Aave token, apart from all the other staking venues that they can utilize to have yields. And yields have like practically dried up, right, everywhere else, and users really need like new venues of earning fresh real APYs. And we think at Polysynth, like DOVs are like that missing critical primitive from the Web2 world, which is like huge in the Web2 world. The derivatives market is upward of 100 trillion in the Web2 world, and it's super underpenetrated in the Web3 world, right? Like derivative to spot is less than 0.01 in Web3. So we want to solidify DOVs as that critical missing primitive that would bring more people into DeFi who are looking for real yields. Because the problem with the DeFi summers that have gone past us has been that token emissions, and I think everyone realizes that, is not a sustainable way to earn APYs, right? And it hits the treasuries, it hits everybody's holdings, and increases riskiness because of the slew of liquidations that happen when you use these as collaterals. Um, so DOVs appear as a way to earn sustainable APYs on the native token of a protocol. So that's one. The other thing that we're offering is treasury management solution. Just to give an example, by the way, uh, so on Polygon, I don't know if everybody's aware, but we recently launched the Matic W Matic wallet. So if you can see, you can actually get your Matic and just put it over here, or if you want to do the covered put, you can put it in this vault. We're working behind the scenes with protocols that I cannot name to actually enable vaults of staked Matic tokens as well. Um, the other solution that I was talking about is treasury management solution that we have for protocols. So DAO treasuries essentially have grown significantly over the past 2 years. So even after like the meltdown that happened, top 50 treasuries completely vested are like well worth upward of $8 billion. However, like most DAOs, native tokens are like the majority of this treasury, right? So so, like these treasuries basically take a huge hit when they're not able to protect the downside of on the price of their native token. So we're developing strategies, and we have onboarded. Let me count: one, two, five, and almost six. So six was closed today. We've onboarded six protocols already to sort of buy our treasury management solutions, which would do two things: allow for diversification, and two, prevent the treasury value from taking a hit through price protection. Now, these are more complex strategies than what we just saw. So what we just saw was like plain vanilla call and put strategy. Now, if we combine these and do other things that I'm not the best person to comment on, we can actually create strategies that protect downward pressure and actually also enable earning of yields on the tokens of these treasuries. So this is something that we're going to be aggressively focusing on this year. For next year, like I told you, we're lined up with synthetics market and perp we do. Those are going to be the two focus for like medium term, right? And the long term, our vision is to become like a cross-chain Binance for the derivatives market, including like play to earn games and so on and so forth. But majorly like all kind of synthetic markets, commodities, interest rate swaps, stocks, everything. And right now we're well on that path because we're getting a really good response from whoever we're speaking to, and everyone realizes that this is something that's critical to the sort of like advancement of DeFi. So the real question is like, how do you bring more primitives that have stood the test of time in Web 2 world into the Web 3 world? And I think uh, DOVs or derivatives is like one of those missing answers.
Okay, yeah, that's super exciting. Lots of amazing things going on. Um, Aditya just wanted some clarification regarding like the vaults. Like, is there any lockup, or are you able to withdraw at any time?
Yeah, so there are two kind of withdrawals. So like I said, let's understand how the deposit cycle works. Uh, every vault goes sort of like goes into a lockup every week. And like but when I say a week, I mean Friday to Friday. So let's say you put your capital on a Thursday, it gets deposited into the vault on a Friday, and then the market maker bids on those deposits. So they get locked for one whole week. What you can do is you can raise a request for withdrawal and the funds will be released on the upcoming Friday. So if you like talk globally, no, there's no lockup. You can request anytime and your funds will be released on the next Friday, on the Friday that's coming up. However, it's good to keep deposited until the Friday that's coming up so that you can have your premiums collected. Because if your money doesn't go into the deposit, let's say you deposited your money on Tuesday and on Thursday you raised a request for withdrawal, you will get your money back on the Friday. But it didn't complete 1 week. So there will be no premiums that will accrue to your deposit for 3 days. Am I making myself clear? Is this well understood?
Yeah, I think that makes lots of sense. I would hope. But yeah, lots of great questions coming in from the audience today. So like, really
Mhm.
appreciate that, guys. Keep it up. Um, One question I always ask protocols is like, um, who do they see as their competitors, and what do they believe like helps them to stand out from them? But like, I'm wondering, like, you guys seem like a completely original concept. Do you really like have any competitors? Is there anyone doing anything similar to what you guys are doing?
Oh yes, actually, there are like a couple protocols on Solana. The biggest one are like the OG of DeFi option walls is Ribbon Finance. That's on Ethereum. There's Theta Nuts and basically like most are cross-chain through bridges, just like we are as well. We have integrated with Biconomi's Hyphen and O3 bridge, so that allows users to bridge their assets from like all EVM compatible chains, Optimism, Harmony, Phantom, BSC, also AVEX, so EVM plus other chains, are like across these chains, right? So in that sense, most protocols are like cross chain in that sense. Um, Ribbon is there, Friction is there, Katana is there, Theta Nuts is there. So there are a couple, not too many. And what one common factor, like amongst all these protocols, is that, including us, is that the retail adoption has not been very high. And there's an obvious barrier to participation that first the education needs to happen. But what really differentiates us from all these people is our the way we approach the strike selection, right? Um, our strike selection is much more competitive, uh, conservative, I'm sorry, and hence competitive. So competitive in the sense that it allows for more users to deposit their assets with lesser risk. Our strike rates are much better because we don't fall in the money. So how this works is that the closer the strike price that you choose, the APY increases, which is why you see like insane APYs on Ribbon, like 150%, maybe 170%, and on other competitors. But the riskiness also goes up. Now, this is the choice that the user has to take. But how we're different is that we really, really believe that it's a better trading and investment strategy to make money consistently than to make a lot of money, lose a lot of money, and not really sit on that roller coaster. So our strategies are much more conservative. That's one. Two, I think the biggest differentiator is our team. um, we're a team of ex-founders from both the Web 2, Web 3 world. Everyone has a lot of experience with building startups from scratch. Our CEO is a four-time exit founder. He's had 4x exits out of his five startups. This is the fifth one, and has been a serial entrepreneur. The CTO, was so much into gaming. He's built like real money gaming mobile servers and was in blockchain since 2013 with the people actually. So we have a DeFi native team, an experienced team. So we're able to really ramp up on partnerships and get the right connections. And I think what would really help a protocol succeed, at least in this kind of industry, like derivative space, is enabling composability. So the more partnerships you have, the more composable you can make other tokens, which means there's more yield for the users to extract and more user base that can interact with your protocol, right? So I think we have a really strong suit over there. And also we're on the Polygon network. We're natively on the Polygon network, so there's low gas fee. The Polygon community is great. I personally think that all of us personally think that we have support of so many other projects on Polygon, and of course of Sandeep sir and Jayanti, right? So these are a couple of factors that we think make us more competitive as compared to the competitors. But to answer your question, yes, there are other competitors. They are much more, how do I say, aggressive in their approach. But the cumulative yield that we've been earning on Polysynth are much better than as compared to all of these competitors.
Yeah, it sounds like you guys have some like really key partnerships and a really strong team back like behind the project. All you guys are really experienced and professional. Um, what drew you guys to Polygon? Like, why did you choose Polygon over other chains? Because that seems to be like a key differentiating factor between like a
Yeah,
lot of these protocols is that you guys are the ones on Polygon.
yeah, absolutely. So I think the biggest reason was I mean, we're not based out of India. The company is based out of Singapore, but all of us are a bunch of Indian founders, and of course, Sandeep has been instrumental in guiding us along the way. And I think the way he mentors Indian startups is just it's heartwarming. Actually, he spends so much time, and so I think that was like the early fill up that we needed, and we really like the ecosystem in general. Like it was also like I think people have a lot of trust in Matic. um it's one of the top chains apart from Ethereum, of course. Like Ethereum has the most amount of liquidity, which is why we're also now deployed on Ethereum apart from Polygon. But Polygon was our first choice because of course the team leading Polygon, and the community that came with Polygon. That's the other reason. And the third most important reason was, you remember, if I told you, we started off as a perpetual trading platform, right? So trade means high frequency, low volume. The gas fee is really important. So we wanted to have a chain that could, afford transactions with low gas fee. And even now, that remains one of the things that really helps us. These yields, right? Like they really get affected if you're on Ethereum. I mean, it's okay because it's a DOV, so your transaction probably happens like once a week. But imagine if we were still a trading platform and we were on Ethereum, people would spend just so much gas making like 5 trades a day. And also like it is like used to congestion and so on. So I think that drove the choice of chain, and it was like a no-brainer for us. The first thing being the presence of a great team leading Polygon, the slew of partnerships. It's a growing ecosystem. The community is really good, and the low gas fee, which was a requirement.
Yeah, those are tons of great reasons, and
Yeah.
I often hear from teams when I ask them, why on Polygon, which is a bit of a redundant question. I ask every team that, but what it seems to be like a really common theme that Sandeep is like the reason, and I love hearing that. Like Sandeep's an absolute legend, and one thing that I love that he says is we're just getting started. And it's like, man, you like Polygon has already come so far, and to say we're just getting
Yeah,
started, it's so inspirational. Guy's a total legend.
I know.
I love it.
Yes, I think he's been so helpful to so many startups, and I think it's I mean, when you're just starting off as an ecosystem, you need to really nurture protocols, and I think Sandeep is too good at that.
Definitely. So, Mariana has a question regarding bridging. Like, I noticed. So, you guys have like, is there any bridging involved with your protocol? He's wondering if you guys are
Yeah,
using an on-chain bridge or some kind of off-chain solution. I noticed on your website you have like 4 bridges listed that users can use. I don't know. Maybe you want to elaborate a bit more on that.
yeah. I can actually show where these bridges are. Yeah, I think my screen is good to go. So if you just go right here, there's like bridge. There's a Polygon native bridge. There's a Bioeconomies bridge called Hyphen. There's Wormhole. There's O3 Swap. So if you sort of like just click on O3, we're natively integrating this so that you don't have to get redirected. That's under development. But if you just go on bridge, so you can bridge from from like so many chains to so many chains, right? And I think pretty much covers uh like a lot of the universe. So combined with combined with other bridges, I think people have the whole suite of swap and bridging options available from getting their assets from some other venue onto Polysynth.
Yeah, I've actually done an AMA previously with the guys at O3 Labs. Those guys are pretty cool. They have a great product going on there.
Yes, they do. They do. They actually have a really good interface.
Yeah. Oh man, this question. Would you ever consider Solana deploying on Solana, or are there
Solana.
any other chains you'd consider deploy? I'm gonna add to that and ask if there's any other chains you'd be like looking at deploying on. Or are you pretty happy with Polygon? I don't know.
Yeah, so like I said, we're already on Polygon. We're very happy with it. But to get like additional liquidity, we deployed on Ethereum. Ethereum has like what, $40 billion. Of course, like I think it becomes a necessity for any protocol to be on Ethereum that cares about TVL. So those are the two that we deployed on. But like I showed, just through the bridge, we're available on all the EVM compatible chains. And I don't know if, like, I don't think we need to explore other chains because the liquidity on chains, apart from the ones that we already have, is pretty low. So we're not going to be prioritizing them yet. Uh, but happy to, consider proposals from other upcoming chains that are interested in building a DeFi ecosystem.
Yeah, for
But
sure.
not Solana soon. Solana, yeah, you can do that through Wormhole, right? Yeah, of course
Yeah.
you can do that
Sorry,
too.
I didn't want to sound too biased. I'm supposed to be like a neutral third neutral party here, so did have to ask that question. Yeah, it's all good, Aditi. Yeah, I appreciate you a lot, man.
Uncomfortable, it's okay. Yeah, but if you want to get stuff from Solana, you can use Momo.
one thing I don't think we touched on was governance. Do you guys have any plans for some kind of DAO structure?
Yes, so we want to be able to do that when we have, like a critical mass of community members. Because I personally think only after there's, a sufficient circulation of the token within the community does it make sense to, release governance. But that's definitely like 200% on the cards. We want to get rid of the responsibility of having to select the strikes and the expiries. And ultimately we want like the ownership and stake to lie with the community members. So whoever holds the poll token, apart from it being just a utility token, Pool token is also going to enable participation in governance related decisions. Two of the examples I just gave, strike selection and expiries, and what kind of assets we want to enable the vaults on, so on and so forth. There's like a slew of things that the community will be asked to participate in. Uh, if I had to put a timeline on this, I would say maybe early by late this year or early next year is when we're gonna start rolling out the structure of a DAO and proposals for people to participate in the DAO with a clear incentive and reward structure, and how to sort of like vote and everything and do the whole tooling. Um, but definitely on the cards.
Um, Fantastic. So one question that like totally while you were saying that came to mind that I totally neglected to ask is like what is the criteria for creating these options vaults? Like what helps you to decide like
Mm,
which types of options vaults to
yeah,
create?
yeah. That's a great question. So if you think about it logically, right? I'm selling these option malls to market makers. The only thing that they care about is they need to be able to hedge as a buyer because they carry risk, right? As a buyer, and they need to be able to hedge it. Now they hedge on, I don't know, like various locations, but one of them being centralized exchanges and all, right? So there needs to be enough liquidity for this token. Now, let's say tomorrow there's like an XYZ token that has like, I don't know, like $200 worth of liquidity. That's not going to cut it. Most market makers require upward of like 2-3 million worth of liquidity of the token. So that's one of the criteria. Like we can only have walls for what we can sell. There has to be a buy side willing to accept this token, and the criteria for acceptance is liquidity because they want to be able to hedge it. That is one. Two, does this protocol have a big enough community? Because the I mean, this is not a necessary criteria because we have treasury management solutions. So even for protocols that want to approach as not looking for a retail solution, but for a treasury management solution, we're happy to open a vault for them. Um, so yeah, actually, if you just think about it, we'll open a vault for anything as long as there's liquidity and the market makers will accept it.
Okay, fantastic. Yeah, that makes tons of sense. Um, okay, we are running a little bit short on time here, so is there? I feel like we got like a really elaborate overview of everything, but is there anything you want to touch on that we haven't already?
I think I did kind of like speak about a lot of things. Let me see. Uh, yeah, that was I think you'd asked me on the chat one question like, what's it like building in the bear market? Like, I get this question a lot in the AMAs. Um, So, just to give a glimpse, like we've actually, and this shows the beauty of the protocol, that it's not only a bull run protocol, right? We've actually grown from zero. Our deposit volume or the AUM was zero back in April. It's $2.2 billion now, and all this has happened in the bear market. So we got to be market resilient. We realize that. And one of the reasons for building TOVs was to give the users protection from wayward market movements. So if you have Ethereum and Bitcoin and Matic, and you want to hold them for the long term, there's no better investment strategy than to invest in the covered calls. Because if the market shoots up, it's a win-win. If it goes down, it doesn't matter because you were anyway wanting to hold these assets and it's not going to go down. That's my personal belief, not from here. So when it's a win-win situation, why not deposit in the walls? And the uh, the other thing that we've built DOVs with a vision of is real yields. Like I said, one of the key, differentiating factors of DOVs and Polysynth in particular is that these yields are pretty much real. Like I said, you give BTC, you get BTC, and that is super important, right? Like because in the bear market, you don't want to hold up, you don't want to stack up tokens that you can't see the future of, but you do want to hold on to blue chip assets. And there's no better way to hold on to blue chip assets than to be able to also earn on them. And that is something that these option balls enable, right? In the real sense. Uh, the other thing that's happened and something that we constantly look forward to is being able to attract good talent that wants to put their head down and work. So this is like an open shout to anyone who wants to work at Polysynth with the team. And we're a small team. We're just like 14 people. So anybody who's interested, wants to learn more, wants to get deep in DeFi, and wants to build like really without the noise, please do hit us up, any one of us. We're all docs. We're all on the website. You can look us up on LinkedIn. You can join the Telegram channel. I think Swansea has posted a link, and you can just buzz us up if you really want to work at Polysynth, and we'll be happy to consider how we can make things work for you. So, yeah, I think those are my closing thoughts that we're building some really cool things. Um, oh, yeah, I actually didn't touch on one thing that's like an industry first. This is called leverage option walls. So, what leverage option walls are basically like right now, you see a 30% real return. We're going to be enabling a leverage feature onto these walls that will allow users to take up to 5x leverage. So, what that means is that with the same conservative strategy, if you are very sure on your prediction for the market, or you like, if you believe in our prediction for the market, you can 5x your returns. So, on a wall that earns 30%, you can like just turbocharge those returns to 150% just by taking uh, money from the leverage pool. And the lending that's going to happen from which this corpus is going to come from for leverage trading, uh, these lenders are going to get like a fixed percentage return basis the utilization of the pool. So there's going to be a lending pool in which the lenders get money in return for their deposits basis the utilization, and these deposits are going to be used for giving leverage to traders who wish to take the leverage. And it's great because this is industry first. No other protocol has it. And so if you're like damn sure, for example, right now I'm damn sure that Bitcoin is not gonna touch 27,000, I would just like put um $1,000 and take 5x leverage. So like borrow $4,000 from the pool and actually make 5 times the returns. And if all is good, I just give back the money while keeping 5x the returns. So that's how leverage boards are going to work. This is something that we're releasing in 2 weeks from now. So be sure to check it out. Um, it's really cool for people who have confidence in their positions that they want to take through the boards. And yeah, it's a great way to earn money.
Awesome. I'm
Yeah, I
really
think
glad
I
we
think I think that's pretty much it. Pretty
oh,
much covered everything.
those are some key points to highlight. So I'm really glad like we made sure to cover all of that. Yeah, and especially the leverage options vaults. That's gonna definitely turbocharge things for a lot of people. So yeah, that's exciting. And then in regards to best places to follow up with you and Polysynth, I've dropped your YouTube channel, your website, Discord, Telegram, Twitter in the chat for everyone to go look at. Definitely encourage you guys all to go follow, subscribe. Is there anything else that I should be including as well?
No, I think this is cool. We got the website, we got the Telegram, we got the Discord. Yeah, I think Telegram is the best place. Discord has a lot of contests, so I think people who are interested in like giveaways and contests can join the Discord definitely. But the best place to reach us out is definitely Telegram. And please join all these channels to stay up to date. We're going to be revealing like a slew of partnerships that we're like building at the back end. Some of these are with the staking protocols. One is a liquidity staking protocol. A few are treasury management solutions. We already got like the deal closed with six, and we're working on like several others. So all these will be released soon. So yeah, just stay tuned.
Awesome. Really appreciate you sharing the alpha with us and just coming out
Mhm.
today and giving us so much high level valuable information. This has been an unreal AMA. So thank you so much.
Yeah, you're welcome. It was great being here. Oh God, it's been it's been more than 1 hour. I didn't realize,
That's
but
okay.
it was awesome being here. It's quite late now over here, but like I guess like wherever you guys are, thank you so much for joining in. And super stoked to see you using our platform. And when you do, it'll be great to have some feedback. Please do come onto the Telegram channel and give us your feedback. Anything is appreciated. Like, oh, this feature sucks. You got to redesign this. I had this problem testing this out, and like whatever, right? Just um, all the feedback is super appreciated. And yeah, thank you so much, Zonzi, for organizing this.
Yeah, absolutely. And thank you so much to everyone who came out and listened today. Appreciate all of you. And yeah, lots of thankfulness in the chat. Someone says,
Yes.
I was hoping they're talking to me, but they're probably saying that you have a lovely voice. So,
It's called tired and exhausted because it's like 9:30.
all right. Well, yeah, we're a bit over time, so I guess we're gonna get wrapping things up now. Thank you so much, everyone, especially you, Swati. It was amazing having you here today, and I hope you all enjoy the rest of your days. And yeah, thanks, everybody.
Thank you. Good night. Good day. Have a good one.